8 weeks of uncertainty is what it sounds like here until this U.S. election is done. There's also uncertainty out of China. Tons to get to today. An update on Victoria Gold, which we're going on 9 weeks now. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. Let's take a look at what they're saying about China. Supposedly, this is why the copper price is being kept down right now. Let's do a quick price check here. Copper is trading at $4.13. Compared to 6 months ago, not a bad price at all, but compared to maybe 2 or 3 months ago, not a great price. Still down, 20 to 30% off the highs, but still above $4. And it seems to me as long as copper holds above $4, it's just consolidating. So let's take a look here. The main concern seemed to be a lack of demand out of China. I almost want to call it a wall of worry out of China. On the other hand, we also have the U.S. election, which is starting to come into focus. With 8 weeks to go, here we are, September 10th, 2 months away, almost to the day. As it says here on this article from Bloomberg News via mining.com, Citi says U.S. election risk to contain metal prices for now. And that is the feeling. If you are bullish on the metals, perhaps this is the opportunity. Uncertainty around the U.S. presidential election in November will prevent meaningful gains for metals by subduing global risk appetite and possibly delaying government stimulus in China, according to Citigroup. So weirdly enough, the U.S. presidential election may be delaying government stimulus in China, interestingly. And here's a quote from Tom Mulqueen and other analysts from Citi referring to the Federal Reserve. Quote, "We think Fed rate cuts, further China policy easing, and an upturn in global manufacturing sentiment will be more constructive for metals pricing in late fourth quarter, early 2025, once the U.S. election is behind us." And there is a sense, not to go into U.S. politics, but there is a sense that neither side will accept the outcome. And perhaps this is the dark cloud that is hanging above the market's head right now. Let's continue this article. Metals from copper to aluminum have retreated in recent months on concerns that Chinese demand will slow, coupled with jitters over the global economy. And it really brings back what Roberta Caselli was saying, a guest who we need to get back on the program here, a commodities analyst, who was saying how preeminently important the Chinese property market is for the copper market. And of course, the copper market is known as Dr. Copper, a gauge on the global economy. So interesting associations at work here. Let's continue. Metals were down across the board Friday after the monthly U.S. jobs report showed hiring fell short of forecasts in August following downward revisions to the prior 2 months. We've been noting this as well, an increased concern about the economy in the U.S. that will likely fuel ongoing debate over how much the Fed should cut interest rates. Copper is heading for a second straight weekly decline on the London Metal Exchange, and aluminum is on track for its 8th consecutive daily loss. Zinc has slumped this week amid more woes in China's steel market. Citigroup held its 3-month forecast at $9,500 for copper and $2,500 for aluminum and said an eventual recovery in global growth should help lift prices. Still, the threat of new or higher tariffs should Trump return to the White House, quote, remains a key risk to the growth rebound narrative, end quote. Trump tariffs being targeted is a key risk here. Quite interesting. Also, Goldman Sachs is slashing their forecast. This is the Financial Times. Goldman Sachs slashes copper forecast as miners' profit outlook dims. U.S. Bank expects commodity to average $10,100 a ton in 2025. Sharply lower than its earlier forecast of a record $15,000. So let's see the reasons being given here. The U.S. Bank warned this week that the expected rally in the copper market would not materialize as the Chinese property rout depresses demand for commodities. It now expects copper to average $10,100 a ton next year, sharply lower than its prediction 4 months ago that it would hit an all-time high of $15,000. Quote, "The copper rally is delayed," end quote, Goldman analysts wrote in a note, citing a drop in Chinese metal consumption that has deepened over the past several months. Goldman continues, quote, "As a result, and given the continued weakness in China's property sector, we believe that copper inventory depletion and its accompanying price rally will probably come much later than we previously thought," end quote. So we remember Jeff Curry, who was early calling the commodities bull market. And we're actually going to hear from Jeff Currie on the next story here. He's also weighing in. He was calling for a massive commodities bull market. Again, copper is the new oil. It's going to be comparable to when oil went from $10 a barrel to $150 a barrel, is how Jeff Currie has been talking about the copper market really since 2020, maybe 2021 at the latest. It hasn't quite materialized. We saw a hint of it earlier this year. There was a renewed sense that this delayed bull market in the metals, particularly copper, that it was about to take shape. And here we are again, more frustration in this long called for bull market in metals. We do have to say, though, with copper being above $4 a pound still, even though Robert Friedland might say we need a $10 to $15 copper price, above $4 is still pretty good compared to where we were the last, year and a half. Treading water below $4, and when it broke $4 again, it was kind of a big deal. So let's hear the latest now from Jeff Currie, who is now with Carlyle. And here's a headline. This is Bloomberg News via mining.com. Carlyle's Currie sees copper price capped at $9,500 on China demand. So also reining in the forecast, seemingly. Let's see what it says here. Copper is likely to trade in a tight range of $8,500 to $9,500 a metric ton until policy support in top consumer China starts to create some demand strength, according to veteran commodities analyst Jeff Currie. The red metal has fallen 19% from May's all-time high of $11,104 a ton, pressured by bloated inventories and signs that consumption in China is soft. The weakness in China's property market, a key pillar for copper consumption, quote, is currently dominating, end quote, said Currie, Chief Strategy Officer of Carlyle Group's Energy Pathways, during a Bloomberg TV interview. He continues, copper, quote, still has a floor based upon the strong structural supply story, but it has a cap on the upside based upon that weakness in demand. I would say $8,500 on the bottom and $9,500 on the top until we start to see the policy begin to create some strength in China, end quote. While at Goldman Sachs Group, Currie and fellow market analyst Nicholas Snowden predicted that copper would reach $15,000 a ton by 2025, Currie joined Carlyle in February. Final paragraph, copper's rally earlier this year was largely driven by hedge funds' bullish bets amid supply disruptions and robust demand from energy transition-related themes, including artificial intelligence and data centers. So you can add that to the Chinese property market. Now, on the Chinese property market, given that the Financial Times and also Jeff Currie at Carlyle via Bloomberg News are highlighting it, there's a story out of CNBC that is discussing the Chinese property market, and the headline is, China's property market has not found a bottom yet, Standard Chartered CEO Bill Winters says. Winters is describing the investing environment in China as, quote, difficult, end quote, explaining that consumer confidence and international investor confidence was relatively low. And he also said the reason China has not launched a massive stimulus program is because the country saw what other countries did in the first wave of COVID, which saddled economies with sharply higher debt levels. Quote, we know that the underlying source of a lot of the confidence questions is the property market. And the property market has not yet completely bottomed out, so it's going to be a slow grind down. Winters also pointed out, quote, there are some signs from time to time that we're seeing an increase in activity, but at the same time, it doesn't feel like we've really found a true bottom in terms of price, end quote. And finally, the danger, he said, is that a property market bubble that bursts in other markets has usually portended a financial crisis, and that is normally accompanied with more significant falls in GDP. There sure is a wall of worry out there, isn't there? So very interesting developments on the macro, which seems to be affecting the metals markets. So a wonderful show today. I'm very pleased to welcome to the show Fortuna Mining President, CEO, and co-founder Jorge Ganoza. He's been on the podcast before, and he is very knowledgeable about West Africa. I've been calling this the West Africa episode because we also have Awale Resources CEO Andrew Chubb, who is also working in West Africa. So you're going to get up to date on two CEOs' perspectives on what it is like to work in the very interesting area of West Africa, all of these different countries, Mali, Burkina Faso, Senegal, Côte d'Ivoire. We're going to get a firsthand view. And, very interesting to listen to Jorge Ganoza's views on engagement, because, of course, most people, once they hear you're working in West Africa, are wondering how difficult is it to, deal with this very volatile government situation, to put it in neutral terms. But I thought the answer that Jorge Ganoza gave was quite interesting, and that was this notion of engagement. And I asked Jorge what the difference between communication and engagement was, and I thought Jorge gave a very interesting, thoughtful answer, which is this idea of a shared purpose. And this idea of engagement, as Jorge says in the interview, it's not just being, hi, we're a mining company, we're setting up in your neighborhood, and we're going to give you jobs, and here's some tax dollars, and ending the story. As he says, it's about realizing that you're there to help them solve a problem that goes beyond you making money and succeeding as a mining company. That is only a part of the story when we're talking about engagement. So it makes me think of this Victoria Gold situation because, of course, engagement, one could argue, is part of the reason we saw events fall out the way we did. And we do have an addendum on this story here that has been really, haunting this podcast since June. Incredibly. So let's take a look at the latest on Victoria Gold as we wrap up our introductory remarks here. This is Bloomberg News via mining.com. Yukon gold mine disaster sparks fears of soaring taxpayer bills. So there is a concern now that the costs that are going to be associated with this mine disaster are going to go beyond the $111 million US that it has been estimated at. Let's take a quick look at what they're saying. Again, this is Bloomberg News. The sudden collapse of Victoria Gold's Eagle Mine, and with it the company, is part of a long and ugly history in northern Canada. So Bloomberg not mincing any words here. To this day, Canada's federal government is still cleaning up arsenic and cyanide spills from mines that were abandoned by their owners decades ago. The country's taxpayers are footing the bill. Victoria Gold's Eagle Mine, which closed in June after its gold processing facility collapsed and spilled cyanide into the surrounding rivers, will cost about $111 million US to restore, according to preliminary estimates from Yukon Territory, a region of just 46,000 people that borders Alaska. But if history is any guide, the cost watch may turn out to be much higher, warns activists and industry watchdogs. And here is a quote from Jamie Neen, head of Mining Watch Canada. Quote, cost overruns are perfectly normal in this business and all of it gets paid by the taxpayer. I wouldn't at all be surprised to see it cost much more than what's currently being said, just because we have constantly seen that these problems cost several times the original estimate. I guess Jamie Kneen is saying, we've seen it in the past, these estimates usually get blown out of the water. And then Bloomberg goes into previous examples. Finally, there's a quote from Yukon government spokesman Laura Seeley, who said in an emailed statement, quote, we recognize concerns regarding potential costs to taxpayers following the Eagle Gold Mine heap leach failure, which is why we pushed for receivership to help prevent this issue. Receivership helps prevent taxpayers from covering cleanup costs by prioritizing the use of Victoria Gold's financial resources and assets to fund the work. End quote. And finally, we have a quote from Kate White, leader of the Yukon's official opposition party, the NDP, or New Democratic Party, who said in an interview, quote, we have very few examples in recent memory of successfully reclaimed mines, end quote. So the fallout continues from Victoria Gold's Eagle Mine. And with that, if you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host this podcast, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Andrew Chubb, CEO of Awale Resources, for this week's CEO Spotlight. Joining us today, I'm very pleased to welcome to the show for this week's CEO Spotlight, Andrew Chubb, CEO of Awale Resources. Andrew, welcome to the show.
Hi, Adrian. Thanks for having me here.
Well, it's an absolute pleasure to have you on, Andrew. West Africa is one of the most exciting places really in the world as far as mining. So tell us, for those that aren't familiar with Awale Resources, what are you up to? Tell us a little bit about the company.
Yeah, sure. Awali listed on the TSX back in late 2017 and have been operating in Côte d'Ivoire since then. It's a good jurisdiction to be in West Africa. And initially we started off with 3 project areas, and now we've narrowed that down to be totally focused in the northwest of the country on what we call the Odieni project. And along the way, we've signed a joint venture with Newmont on part of our properties. So 2 properties covering 800 square kilometres out of a 2,500 square K package. And we've been moving forward rapidly in the last 18 months and have made some really significant discoveries on the project.
Okay, interesting. So this is the main project then, the Odiene project, and this is in Côte d'Ivoire. Would you call this like the flagship or the main focus of the company?
Absolutely, yeah. We've now got our foot on 2,500 square kilometres on a district scale play there. And, the really exciting thing for us about it is that we went into a new area in Odiene and Côte d'Ivoire. There hadn't really been any serious exploration done in that location, and we've come up with new geological models and new ideas and started to apply those. And now those are bearing fruit on what we think is a district scale mineralised system.
Okay, excellent. And so this is a gold project then. Is it purely gold, or are there other metals too that are in the system?
No, it's gold, copper, moly, silver. So the model we've been using is sort of a hybrid intrusive related orogenic iron oxide copper gold system. So, all the deposits have varying degrees of gold and copper, like in ratio with each other, along with molybdenum and silver. So there's a common fingerprint between the 4 discoveries that we've made. And in the geochem on pipeline targets, the same theme keeps coming up. So it really looks like we are in a large mineralized system in the district, and it's really exciting stuff.
So where are we in the project then? So you've been drilling then, and you've been finding things, and you think you're onto a kind of system of sort. Is that right?
Correct. So we really started drilling the project in 2020, 2021 field season, with initially funded by Awali and subsequently funded by Newmont in the joint venture. And so we've drilled about 36,000 metres on the project now. And through that have made those 4 discoveries. And we're looking forward to the next field season, really, to be advancing those targets as well as developing the pipeline targets that we have. It's between a discovery and a first resource phase, if you like.
Okay, excellent. And you mentioned that Newmont was involved. Tell us a little bit about that.
Yeah, so they liked what we were doing, and we signed a joint venture with Newmont 2 years ago now. And since then, they've been fully funding exploration on part of the project, and we've spent to date roughly $7 million of a $15 million earn-in agreement on those 2 permits.
I think a lot of investors, when they hear West Africa, maybe some of them wonder about the jurisdiction. How is it working in Côte d'Ivoire? What kind of, relationship do you have with the local people, the government? Tell us about working in Côte d'Ivoire.
For me, it's an excellent jurisdiction to be operating in. It's got a sound mining code that we operate within. Personally, I've been consulting or exploring with junior and senior companies over many years in West Africa, and I've actually been there solidly for the last 10 years. And, Côte d'Ivoire is definitely one of the better jurisdictions I've worked in over the years, and I've worked in just about every West African jurisdiction. So really happy with where we are, and we're sort of through that experience. One of the main things that I try and implement with the companies I work with is having a close relationship with stakeholders at all levels. So we have an excellent relationship in the Odieni district with the local stakeholders and all the way through to the government people down in Abidjan. Everyone is cooperative and good to work with.
How do you find the permitting process? Are you able to basically get what you need done? I've heard it goes a little faster oftentimes in West Africa than, say, perhaps North America. How is the permitting side of things?
Yeah, so I think, the discussion that you're talking about there, I think that's the mining permitting process, which tends to be a lot more the average sort of discovery or PEA to first pour, say if it's a gold project, I think it's somewhere between 6 and 8 years in West Africa, whereas often in Australia, Canada, US jurisdictions, it's up to double that kind of time. And then as far as we're concerned with applications and getting permits, again, there's a set process in place where you go through a committee and it passes the committee and then you get ministerial sign-off. So there is set frameworks that we work within and it functions really well.
Very interesting. And so as far as the roadmap on this whole project, where do you see this going? What is the plan, let's say, for the next, 6 months to 2 years, for example?
So, like I said, we've got, $7 million to spend of the Newmont joint venture. And we also recently, that's US dollars. And we also recently raised 11.5 million of Awali dollars. So on the Newmont joint venture project, we'll continue to develop pipeline targets, but also start to drill more intensely on the discoveries that we have made over the next 6 to 18 months. And the 100% Awali targets, they're grassroots targets, and we've just started up geochemistry and all those sorts of things with a view to be drilling them at the end of next field season. So sometime in 2025, we'll be drilling 100% Awali targets. So as I mentioned, the phase we're at is, in between discovery and an initial resource. So that's what we'll be driving on the joint venture project, is bringing some of those targets towards resource, as well as, keeping on exploring the excellent pipeline targets that we have.
It sounds very exciting. And so as we wrap up here, Andrew, what is your message for investors? Like, we have a lot of, retail, maybe some analysts that listen to the show and others. What do you want them to know about Awali Resources and the ODNA project?
I think Awali's been through it's not all me, it's part of the team, but the company went through some pretty rocky times. I took over as CEO. I've been with the company since its inception, but I took over as CEO in May last year with the investment from the All Group. And alongside that, we've been able to sort of fix the company and get the company moving forward in the right direction with the right project focus. And so throughout that last 18 months, we've actually been able to, I think, significantly de-risk the project. We're not an early stage exploration play anymore. And Newmont's still very interested in the project and sort of funding on 2 of those permits. And we're well funded moving forward on our 100% Awali project. So we're not looking to go back to market or anything like that in the near future. We're well funded. We've got a district scale play with already pre-existing discoveries on it. So yeah, I think we're a good investment opportunity as a junior explorer.
And Andrew, what is the ticker for Awali Resources? Where can you find these listings?
Yep, so we're listed on the TSX Venture Exchange as ARIC or ARIC. And as you mentioned, plenty of information about the company on the website, and also, Artem Kashishian, our corporate dev VP, and myself are happy to field any questions that anyone may have. Drop us on the info@Awali email or give us a call.
And if people want to learn more, they can go to awaliresources.ca. Andrew Chubb, CEO of Awali Resources, thank you for joining us on this week's CEO Spotlight.
Thanks very much, Adrian. Thanks for your time.
And thank you once again to Awali Resources for sponsoring this week's episode of the Northern Miner podcast. If you want to learn more, go to awaliresources.ca. And turning to the website, we heard in the last couple of weeks how Canada imposed a tariff on Chinese electric vehicles. Well, China has responded, and they are lodging a WTO complaint over Canada's EV and metals tariffs. This is Bloomberg News via mining.com. And it says here, China will take Canada to the World Trade Organization to challenge Ottawa's decision to impose new tariffs of up to 100% on Chinese-made electric vehicles, steel, and aluminum. The Ministry of Commerce labeled the tariffs as trade protectionism that distort global supply chains and urged Canada to withdraw the measures, according to a statement Friday. This is the third time China has brought EV tariffs to the WTO this year, following the cases against the US in March and the European Union in August. I wonder if that's why the European Union reduced their tariffs. Interesting question. As China's exports rise to counter its slowing domestic economy, more countries are raising or contemplating tariffs on Chinese goods. Canada announced last week it would impose a 100% tariffs on Chinese-made EVs effective October 1st. The new tariff will also apply to certain hybrid passenger cars, trucks, buses, and delivery vans, in addition to the existing 6.1% tariff on Chinese EVs. A 25% levy on Chinese steel and aluminum will go into effect on October 15th. Beijing has also started an anti-dumping probe into rapeseed imports from Canada, the Commerce Ministry said this week, adding that China will take all necessary actions to safeguard the legitimate rights and interests of Chinese companies. So China striking back and taking everybody to the WTO, interestingly. And speaking of China, this week in Beijing, there is the 9th Forum on China-Africa Cooperation. And it is starting on Wednesday. And so, of course, minerals are going to play a huge role in that conference. And I'll just read you the headline, which I think kind of speaks a lot to what we've been seeing here. Xi wants bigger returns, fewer headaches from African debt deals. That's a headline from Bloomberg News via mining.com. And we have another headline. This is Reuters via mining.com. Race for critical minerals affect African nations most, South Africa says. A very short article here from Reuters. The contest for critical minerals is fueling geopolitical rivalry, creating challenges that are, quote, more significantly felt by African nations, end quote. South Africa President Cyril Ramaphosa said on Thursday in Beijing. Ramaphosa made the remarks in his speech at a summit for the Forum on China-Africa Cooperation, hosted by Beijing congregating leaders from 50 African nations this week. He said the forum, quote, reflects our shared desire for modernization, development, and progress on the African continent, end quote. Continuing on, we're starting to see developments on U.S. steel, which Japanese steelmaker Nippon Steel wanted to buy, and that U.S. Steel wanted to be sold to. But Biden is thinking otherwise. Here's the headline. Biden close to blocking Nippon Steel deal to buy U.S. Steel. This is Reuters via mining.com, and we have a few stories here. The Biden administration is close to announcing it will block Nippon Steel's acquisition of U.S. Steel. Two sources familiar with the situation said on Wednesday, amid growing bipartisan political opposition to the $14.9 billion deal. The panel that is reviewing the proposed merger for national security reasons has not sent its recommendations to the president, the White House said. The Treasury Department, which is overseeing the national security approval process for the deal, declined to comment. It continues, U.S. Steel had earlier warned on Wednesday, so last week, that a failure to merge with Nippon Steel would put thousands of U.S. union jobs at risk, and signaled that it would close some steel mills and potentially move its headquarters out of the politically important state of Pennsylvania. So interestingly, it seems like U.S. Steel is saying, if you want to keep the steel in Pennsylvania, you should actually sell it to Japan's Nippon Steel. Nippon's planned acquisition of the U.S. steelmaker faces opposition from Democrats and Republicans, with Vice President Kamala Harris on Monday saying she wants U.S. Steel to remain, quote, American-owned and operated, end quote. Her Republican rival Donald Trump has pledged to block the deal if elected. Pennsylvania is a crucial battleground state that could sway the outcome of the 2024 presidential election, and both candidates are making repeated visits there. And here's a quote from U.S. Steel CEO David Burritt. Quote, we want elected leaders and other key decision makers to recognize the benefits of the deal as well as the unavoidable consequences if the deal fails, end quote. He said that without the deal, quote, U.S. Steel will largely pivot away from its blast furnace facilities, putting thousands of good-paying union jobs at risk and negatively impacting numerous communities across the locations where its facilities exist, end quote. The United Steelworkers Union criticized Burritt, accusing him of, quote, making baseless and unlawful threats. Quote, today's pathetic attempt to orchestrate a rally in downtown Pittsburgh shows that U.S. Steel is becoming increasingly desperate to save the deal, end quote, the union said. So quite interesting development there. And another headline came out from Bloomberg via mining.com, U.S. Steel assets face chopping block without Japan deal. And here is Josh Spoors, principal steel analyst at CRU Group. So perhaps a more objective party than the CEO or the union, or the politicians even. Quote, it's hard to see any steel entity as they are today buying all of U.S. Steel. it may end up getting split up between bidders, end quote. Bidders for U.S. Steel's assets could range from private equity firms, investment firms, and other domestic steel producers, Spurs said. U.S. Steel's new electric steelmaking mill in Arkansas, known as Big River Steel, is arguably its most valuable asset. American producers including Nucor and Steel Dynamics, which are actively investing in less polluting manufacturing processes, could be among potential buyers of the plant, according to Philip Gibbs, analyst at KeyBank Capital Markets. So, kind of a tough situation for U.S. Steel, seemingly. And another related headline, this is Bloomberg News via mining.com, iron ore price sinks as Steel Group warns of flash-in-a-pan recovery. So more signs of, risk aversion. Iron ore slumped to its lowest level since 2022 and traded near $90 a ton as China's main steel industry group advised mills to be cautious in boosting output too quickly to avoid snuffing out a post-summer recovery. The steelmaking material has fallen by more than a third this year, with prices coming under severe pressure as flagging steel consumption batters loss-making Chinese mills. Steel buying typically picks up after the summer, which will provide a fresh test for producers. And here's a quote from the China Iron and Steel Association, who said in a note after meeting with steel producers in China, quote, "There will be a certain degree of recovery in steel demand through September and October, which is favorable for the steel market. However, we need to be cautious of the impulse to restart production. Otherwise, any improvement in the situation will end up a flash in a pan." And here it's back to Chinese real estate. China's steelmakers are battling a crisis as the nation's year-long property crunch wipes out a swath of demand, creating fierce competition and a glut of the metal. This has created a, quote, "challenging environment for iron ore," end quote, in the near term, Goldman Sachs said in a note earlier this week. Also, a quote from National Australia Bank analysts who said in a note, quote, "Global economic conditions remain broadly unfavorable for commodity demand," end quote. And finally, Zhao Yang, head of research at GF Futures, told Bloomberg, quote, "Mills are losing money and iron ore inventories are piling up at ports every day. The fundamental picture supports the slide in. Overall, it's due to weak steel demand. People are pessimistic." Let's continue. Indonesia sees nickel price holding near current levels on new plants. This is Bloomberg News via mining.com. Indonesia's government sees nickel prices stabilizing near current levels in the future as new plants in the world's biggest producer offset rising demand and keep the market well supplied. Prices on the LME should hold around $15,000 to $16,000 a ton in the short to medium term. Seption Haryo Seto, a deputy at the Coordinating Ministry for Maritime Affairs and Investment, said in a presentation in Bali on Thursday, quote, "I'm not really worried if the world needs an increase of nickel supply," end quote, Seto said at the Fast Markets International Critical Minerals and Metals Summit. Quote, "With this capacity expansion alone, it will be enough," end quote. Indonesia's production has surged to more than half of global output in recent years, causing prices to plunge and forcing producers elsewhere to shut down. That's despite growing demand for the metal from the electric vehicle sector, which uses its high-performance batteries. And it's interesting how we're seeing all the battery metals really take a hit here. And continuing on, a story that's been going on for years here. Vale BHP Samarco could close $18 billion deal over Brazil dam collapse. This is Reuters via mining.com. Mining companies Vale and BHP, together with their joint venture Samarco, may soon reach an agreement with Brazilian authorities to pay around $18 billion for the collapse of a dam in the city of Mariana, said 4 sources familiar with the discussions. 3 of the sources expect a final agreement to be reached in October. Interesting development there. Continuing in South America, Codelco pays $520 million for Inami's 10% stake in Teck's Quebrada Blanca copper mine in Chile. Interestingly, and this is by mining.com staff, Codelco is purchasing Inami's 10% stake in Teck Resources' Quebrada Blanca mine in northern Chile for $520 million. The deal will contribute 25,000 to 30,000 tons of copper to Chilean state-run miner Codelco's annual output and reduce Ecuadorian state-run Inami's debt to $250 million from $740 million the company's announced on Thursday. So Codelco, who has been struggling to keep output rising, is now buying part of Teck Resources' Quebrada Blanca mine, a 10% stake. And here is a quote from Codelco chairman Maximo Pacheco, who said in a news release, quote, "Our strategy of developing and strengthening the company through partnerships will enhance our position in the copper and lithium markets and in turn increase the value that Codelco contributes to the country. It is very positive that an asset of this value remains in the hands of the state." End quote. Continuing on, First Quantum to begin $3.5 billion Taca Taca copper project build in Argentina next year, according to a report. I also discuss Argentina with Jorge Ganoza, and he seems pretty constructive on it. First Quantum Minerals plans to start construction of its $3.5 billion Taca Taca copper project in Salta province next year, according to Rumbo Minero International. According to the news outlet, representatives of the Canadian mining company made the announcement at a local mining event after meeting with Argentine government authorities. Taca Taca, located 230 kilometers west of the city of Salta, is an advanced exploration stage copper, gold, molybdenum, porphyry deposit. Continuing on the copper theme, Ivanhoe Mines Kamoa-Kakula hits record copper production in August, also by Mining.com staff. Ivanhoe Mines Kamoa-Kakula copper complex in the Democratic Republic of Congo has achieved a monthly production record of 40,347 tons of copper in concentrate and a combined monthly milling record of 1.1 million tons in August. So more good news for Ivanhoe Mines in the Democratic Republic of Congo. Another interesting story, this is Canada Nickel, who we've been following for years here on this program. Interesting headline on the Northern Miner. Canada Nickel may net $500 million US Ottawa loan for giant Crawford project. I remember asking Mark Selby, the CEO of Canada Nickel, years ago, this direct question, like, should the government, lend you money? Should the government step in? At the time, he said no, because there is a sense that if you take the money, all of a sudden you don't have sovereignty over your project anymore. This is by Colin McClelland at the Northern Miner. Let's see what it says. Canada Nickel says a Canadian government agency might loan it $500 million for its Crawford project in northern Ontario, which could become the world's largest nickel-cobalt sulfide development. Export Development Canada, or EDC, which finances and offers other help to domestic companies, sent a letter of intent to Canada Nickel in late August, it said on Friday. It would be combined with US $600 million in tax credits expected from Ottawa to help build the $3.5 billion CAPEX project near Timmins over 2 stages, the company said. And here's a quote from CEO Mark Selby, who said in a news release, quote, "It marks an important milestone towards securing a full financing package for Crawford. We continue to make good progress with our financial advisors, Deutsche Bank, Scotiabank, and Cutfield Freeman to secure the remaining project funding required to begin construction when permits are received, which we expect to be by mid-2025, end quote. And they also have an investment from Agnico Eagle, who got a 12% stake for $23 million in January, and Anglo American, who bought a 10% stake for $24 million. South Korean battery manufacturer Samsung SDI holds a 9%, and rights to potential offtake agreements after paying $18.5 million. Very interesting. And here's analyst Matt O'Keefe, who said, quote, "We continue to like Canada Nickel and its Crawford project for its excellent jurisdiction, positive economics, carbon capture potential, and quality partnerships. We maintain our buy rating and a $3.50 share target price." End quote. Very interesting development there. Continuing on, First Majestic to expand in Mexico with $970 million Gatos Silver buy. So we continue to see more M&A here. This is by Cecilia Jamasmi on the Northern Miner. First Majestic Silver is buying fellow Canadian explorer and developer Gatos Silver in an all-share transaction valued at $970 million. Quite a bit of money, actually. The move hands First Majestic a group of high-grade, large silver deposits in the Los Gatos Silver District of Mexico's Chihuahua state. The combination of the two companies' assets would consolidate 3 silver-producing mining districts in Mexico under one banner. Gatos Cerros Los Gatos mine will join First Majestic's San Dimas mine in Durango and Santa Elena operation in Sonora, they said Thursday. And just a few headlines here. Ascot halts premier gold mine operations in British Columbia just months after its first pour. This is by Henry Lazenby at the Northern Miner. Ascot Resources suspending operations at the premier gold mine less than 5 months after celebrating its first gold pour. Insufficient ore feed from the Big Missouri and Premier Northern Lights deposits, located 25 kilometers from Stewart in British Columbia's Golden Triangle, led to missed production targets and a halt in operations. Ascot will need to secure additional funding to complete that necessary work, it said in a statement. And finally, global gold ETFs saw fourth month of inflows in August, according to the World Gold Council. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market. For context, the U.S. 10-year bond is yielding 3.73%. That is down 0.18% from last week. So one wonders if uncertainty is pushing down yields. The UK 10-year gilt is yielding 3.89%. That is down 0.16% from last week. And the Italy 10-year bond is yielding 3.56%. That is down 0.14% from last week. Turning to precious metals, gold is trading at $2,528 even. That is down $6 from last week. Silver is trading at $28.50 per ounce. That is down 36 cents from last week. Platinum is trading at $934 even. That is $12 higher than last week. And palladium is trading at $955 even. That is down $14 from last week. Turning to industrial metals, copper is trading at $4.01 per pound. That is down 12 cents from last week. Iron ore is trading at $91.61 per metric ton. That is down $7 from last week. Aluminum is also lower at $1.06 per pound. That is 4 cents lower than last week. Lead is also lower at 89 cents per pound. That is down 5 cents from last week. Nickel is also lower at $7.21 per pound. That is down 40 cents from last week. Tin is also lower at $14.07 per pound. That is down 60 cents from last week. Cobalt is unchanged at $11.02 per pound. Lithium is lower at $10.23 per kilogram. That is down 31 cents from last week, and a new low here in the last 8 months or so since we started tracking it. Uranium is trading at $79.95 per pound. That is up 70 cents from last week, and zinc is lower at $1.23 per pound. That is 6 cents lower than last week. One gets the sense that September and October are getting people concerned. There is a general sense here of risk aversion from everything we're seeing the analysts say. We look at the metals markets, which oftentimes can be seen as leading indicators of the macro, just like we see with copper, and there's copper at $4.01 per pound. I think if copper closes, and as Gareth Soloway would say, and confirms below $4, if you're a bull on the metals markets, you may see some great buying opportunities. The only fly in the ointment I would say is I think a lot of people are waiting for a wonderful buying opportunity, and it sure feels like a wall of worry, doesn't it? Of course, the prices are not climbing as it stands, and those are your metal prices. Coming up, I'm very pleased to welcome back to the program Jorge Ganoza, President, CEO, and co-founder of Fortuna Mining, what used to be known as Fortuna Silver, and you're going to find out why they changed the name in just a few moments here. It's a wonderful discussion on the importance of engagement, as well as what it's like to work in West Africa, as well as the excitement around Argentina, and much more. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Jorge Ganoza, President and CEO of Fortuna Mining. Jorge, welcome back.
Thank you again for the opportunity to be in the show.
Well, I always kind of have a special place in my heart for Fortuna, now called Mining, but Fortuna Silver, because I kind of got introduced to this industry by subscribing to the Dines letter back in 2010, and Fortuna Silver was kind of a bellwether stock on the Dines letter of the silver market. So I've actually followed that stock for a long time. So I'm really happy to have you back on. So tell us then, I mean, you've changed the name of the company. What is new at Fortuna Mining and why did you change the name?
So, Adrian, Fortuna was founded almost 20 years ago by now. It was three associates, big ideas, and very little money. Today, we have a company with a diverse workforce of over 5,000 men and women listed in major capital markets and the NYSE, operating across regions, $350 million in liquidity available, tracking to deliver $1 billion in metal sales this year. So the company has changed significantly. And back in the day, it made a lot of sense because of the limited resources to focus on silver, to focus on Latin America, basically Peru and Mexico, which are the time where the first and second largest silver producers in the world. China was not in the picture back then. And have a strategic focus. So the identifier silver back in the day made a lot of sense. It really represented the core of the strategy. Today, almost 20 years later, the company is completely different. We're still very much focused on precious metals, but we have expanded across two regions. I'm sure we'll talk about later on the program. And just that identifier silver does not best represent who we are today and where we're going. Today, 80% of our revenue comes from gold, and silver also makes today a small portion of our reserves. No? So the name Fortuna is widely recognized by the industry, analysts, investors. So, Fortuna Mining is a better description of who we are and where we're going.
Okay, excellent. And so for listeners that aren't familiar then, for those that need a refresher, where are you working right now? Because of course you did start in Mexico and Latin America. You have other projects in, I think, West Africa. Tell us, where else are you working right now?
Yes, today we are almost a 500,000 ounce producer, and 55% of our gold equivalent production, let's say, comes from West Africa, the Côte d'Ivoire, the Ivory Coast, and Burkina Faso. In the Latin American region, we operate mines in Mexico, Peru, and Argentina. So we're currently operating in 5 countries and developing a project on a sixth one in Senegal, but very much focused on these two regions, Latin America, the Cordilleran Belt in Latin America, and West Africa, which we identify as two premier mining regions.
I remember actually the last time we talked, and you mentioned that West Africa, in your view, was one of the richest areas for gold deposits in the world. As you told me, if you got rid of all the borders, it's one of the richest. Is it the richest in the world, in your opinion? I mean, refresh my memory on what you said. I mean, how do you see West Africa in gold terms?
There is no other region in the world that exhibits the kind of growth in resources, reserves, and production. If we remove those borders and just group geographically the mining regions of West Africa, it's a surface area the size of France or the size of the great state of Texas in the US. Okay? That area produces more gold than continental sized nations like China, the United States, Russia, Australia, Canada. By far, that small region has more gold output than any one of those top gold producing countries, which are all continental size. Right?
Okay, excellent. And I mean, I think the first question a lot of people would have working in that region, I mean, we've seen a lot of political volatility, shall we say. And so, how are you finding working, say, in Burkina Faso? I guess Senegal to a certain degree, but Burkina Faso, of course, has had some big changes there. So, how are you dealing with it? I mean, we saw Barrick with Mali, and there was rumors, but nothing really happened. And it seemed like Mark Bristow dealt with things pretty well over in Mali. But how is working in Burkina Faso? How challenging is it?
Before we dig into the detail of Burkina Faso, which we will, let me tell you that, As you see, our business is focused on emerging nations, emerging economies, young democracies. So we have, as Fortuna, a high tolerance for some of that geopolitical risk. But at the same time, we are designed to manage that in our organizational structure and in the pool of talent that makes Fortuna today. No, that is very important. No, because for us, mining, Adrian, has always been a frontier business, and we're happy playing in the frontier, right? There are advantages and opportunities, and of course, challenges and some disadvantages. For example, all of these nations are, for the most part, countries that want to grow their extractive industries, their mining industry is important to them, they foster it. So we have to have a stomach and some tolerance for the eventual coup or some political turmoil every now and then. But the permit process, without cutting corners, is swift. You always have support from central government. There is no other place in the world where you can permit and grow the business like you can in some of these regions. And we're geared, designed, and we have the talent in the company, that diverse talent in the company of multiple engineers, business professionals that have cut their teeth, their years of experience building, developing mines, conducting business in these parts of the world. Burkina Faso is one of the challenges today in the portfolio. Absolutely. There is a concerning security issue in Burkina Faso. We operate a mine there, a mine that's been performing quite well over the last few years. And we continue focused on investing within the fence. But Burkina Faso is not today a place where we want to expand our investments.
Okay, very interesting. And how do you approach, say, working in a challenging region, whether it's Burkina Faso or anywhere else? Like, do you have a kind of philosophy? For example, let's have a lot of communication, for example. How do you approach working in a challenging region from a strategic point of view?
Engagement. No, I think the more than communication, I would say engagement at all levels. No, I work very closely with senior leadership of the company in all of these jurisdictions, and I support them and have a very close and meaningful engagement with authorities. These are places where the rule of law is, these are emerging economies, young democracies. So you have to be able to engage, convey, advocate for your business, your industry, make very clear, the standards that you uphold, no, in doing business. All of that is communicated from the top down, no? So it starts with me, with the senior leadership of the company, and with meaningful engagement with local authorities, right? Local leadership.
Very interesting. Just very briefly, I mean, how would you distinguish, let's say, between communication and engagement? Like, what does engagement mean for you?
You know, Engagement means being close and being able to connect and convey and establish a common goal, right? With the leadership in all of these countries, no? It's not just coming and saying hello and this is who we are and leaving. You have to be there, you have to build a rapport and be able to establish a common goal. All of these countries really need to uplift the standards of living of their population, society, and we can be a strategic partner helping them in achieving that. And them understanding that us being buying into the problem, right? Helping from where we are, from the role we play in society through business, being a good partner for those economies, for those governments, for those states is important. So you have to engage, at all levels. You have to engage. You have to buy into the problem, right? It's not just I pay taxes and that's it. No, and I'm going to give you employment and I pay taxes. It's not like that. You need meaningful engagement.
Right. Really, as you use the word partner, like in a sense, it is a partnership towards a shared goal. And that is different than
Absolutely.
simply saying hi, once a week and calling
I,
people
Hi,
It's
I am Fortuna.
right.
I'm here
Exactly.
to invest, pay taxes, and give some employment. No, no,
Yeah.
no, no, no. It's you need to buy into the problem. No, they need to see you as a partner. Absolutely.
Right. And maybe even as part of the solution to a certain degree. And just curious, when you say you look for emerging democracies, like that sounds like it's a part of the strategy in a sense to go to places that maybe are seen a little bit on the higher end of the risk curve, geopolitically speaking. In a sense, is that the strategy because perhaps that's where the opportunity is? Because it's kind of seen as riskier, but you feel like, hey, maybe we know how to navigate that better.
It's not like we look for trouble, huh? It's not like
Right.
we look to make our life more difficult. But we look at those, gold endowed, well endowed regions like West Africa. And sure, as I say, for us, mining has always been a frontier business. So we're willing to go to the frontier. It is the case that in many instances, these frontier countries, from frontier regions, have emerging economies, young democracies. So that's the playing field. And you have to be able to, as we just discussed, operate and adequate your strategies, your plans to that. There are pros and cons. We would all like to have a mine in, I see projects in North America all the time. And, for example, the time for permitting is completely different, right? So, yes, you can get permitted much faster in West Africa or in some places in Latin America than what you would call more stable jurisdictions. And it also creates an advantage for us, Adrian, because it's not everybody who can operate successfully in these frontier regions, right? We're designed for that. So that gives us an edge, we believe, right?
For sure. I would say it's a crucial skill for a company to have. It's almost like a kind of diplomatic wing of the company. But I think, to your point, I'm not sure it's quite as common perhaps as it should be. But I think just out of necessity, you have to have it. I mean, we saw what happened with Cobre Panama there in Panama, for example. I mean, who knows what happened there, but perhaps it was a diplomatic failure of sorts. One could argue on a certain level. Now, speaking of Latin America, you're also working in Argentina, aren't you? And Argentina is kind of an exciting place, I would say, from a mining perspective, with Javier Milei entering power, someone who's very much kind of pro-business, libertarian. Tell us about Argentina. How are you seeing it? What are you working on there?
We commissioned our mine in Argentina at the end of COVID. So we had to build and commission through the worst of COVID. And towards September, the end of 2020, October, September of 2020, we poured first gold. Lindero Mine has been a good investment for us in spite of the challenging business conditions in Argentina. We've been able to repatriate funds, and it's been a good mine. Argentina today is certainly taking the right steps to correct the big imbalances of the economy and attract foreign direct investment. In less than 10 months, the government of President Milei has removed or reduced export and import duties, certainly setting the right tone for investment. The problem is large and important changes still have to take place, but we believe Argentina is heading in the right direction. It's a big mess they have to get out of, but they're certainly heading in the right direction.
And as far as, say, Mexico, we've seen pretty interesting headlines coming out of there. They just elected a new president. And before the election, there were issues with mining claims, say in Mexico, which, traditionally was seen as a fairly, quote unquote, safe jurisdiction. And recently, I think in the last couple of weeks, we saw that there's going to be discussion around banning open pit mining. What is your take on what's happening in Mexico?
It is no secret that over the last 6 years, which is the Lopez Obrador administration, which is going to hand power to Claudia Sheinbaum this month of September, this administration has been adverse to mining, right? And it's a shame because Mexico is a country with a long and proud mining tradition, right? So to see this adverse attitude towards mining investment in Mexico is difficult. Now, at the end of his term, Mr. López Obrador wants to have this bill passed, which, among many things across many sectors, one of the things impacting us is that it bans open pit mining, and it basically centralizes more decision making on a few individuals, right? Rather than strengthening the due process, is concentrating the decision making on a few hands. So we don't see that as positive. We're watching it carefully. You know, we like to still believe that Mexico is a place where you can invest long term, but we are certainly watching it carefully. You know, when we get together to review our budgets, Adrian, once a year, we look at all of these regions and jurisdictions where we operate. Believe it or not, we have a strong geographic focus. We try to remain focused on the regions where we are, in the countries where we operate, to leverage our advantages and infrastructure. When we decide how we allocate money, we're not only strategic about it, but also tactical. We will not deploy capital to places where we just don't see a return on that investment on a reasonable time frame. Unfortunately, it appears to be that Mexico is heading that way.
Very interesting. And another jurisdiction that has become increasingly popular, let's say with the Robert Friedlands, the Sean Rusens of the world, is the United States. But it seems to me like Fortuna, this might not be necessarily your kind of jurisdiction for the very reason that you mentioned, that perhaps the timelines are so long that maybe that's not your favorite place. But you tell me, I mean, what do you think of the United States right now? What do you think of it as a jurisdiction? You know, what do you think about this kind of movements we're seeing in the US towards developing mining?
You know, we prioritize investments in the regions where we are, or let's say our first priority is countries where we're established. Our second is near neighbor. And third, if we see one of those world-class opportunities in front of us, we'll jump across. Certainly North America, Canada, and the US are places that we watch, we monitor. The competitive landscape is completely different there, right, to where we are established already. But we don't have a, let's say, fundamental reason why we don't invest there. But we believe it is easier, faster to develop tier one, tier two deposits in the regions where we are faster than you can in North America. And that's why we're always geared to go stay where we are, right?
Right. So time is very important.
This is an ever depleting business, right? Replacement of reserves, ability to source additional resources, mineral resources is key, particularly if you're in the gold mining industry where your life of resources usually hovers around 10 years plus, right? So we like to be places where we can be nimble, move quick, permit fast. That's what we favor. Having said that, a good opportunity in North America, we would certainly pay attention to it. No?
We've seen a lot of cost inflation in mining in the last few years, let's say the last 3 or 4 years. Is it difficult to be profitable, with metals at today's prices? We've seen a run up, say, in some of the metals, copper's doing all right, silver's doing all right, gold's doing quite well, but costs are also going up. So tell us about costs. Like, how is that looking from your perspective as someone who's working in, several regions around the world?
This is the most important topic because having lived through a couple of relevant cycles, industry cycles, can tell you that one of the bigger challenges we have as an industry in respect to our shareholders is maintaining our margins in a rising metals market, right? We need to be able to maintain and expand our margins, right? If we listen to the World Gold Council, the average all-in sustaining cost for the global gold mining industry currently sits marginally below $1,500 per ounce. So let's say 50% of the global gold mining industry today is enjoying very healthy margins. We sit at around $1,500 pretty much, $1,500 to $1,600. We have one large capital project this year that skews for ASIC, but long term, medium term, we are a $1,500 per ounce ASIC producer. And that's a good place to be. We're working hard to not only maintain but expand our margins as prices continue to rise. And that is a key aspect of all of us in the industry. We're all working hard to see how we can be more efficient, capture opportunities on the cost side, which is what we control, to retain margins. Perhaps at the time of assessing reserves and resources for budgets, maintaining budgeting with lower prices so we maintain higher grades on the reserve. That's another key aspect, right? So not necessarily just expanding reserves, but retaining grade at the expense of smaller reserves. So all of those things are coming into consideration, and I think most everybody in the sector is working on that.
Very interesting. So you mentioned earlier that gold is playing a pretty prominent role. Silver is still there, but not as prominent as it was before. Are there any other metals? A lot of people are excited about copper. Is there any other metals that you're looking at? Are you looking around for certain things? Is there anything that people aren't paying attention to that you're interested in as the president and CEO of a mining company?
That's a discussion that we engage on at a strategic level, and we do. And the outcome of that discussion is we should remain focused on precious metals, gold and silver, silver and gold. We have seen a lot of the more senior producers in the gold space gravitate towards copper. It's not the first time we see that. That has happened before. But now, again, coming in strong on the case for copper with good rationale. No, I don't dispute the rationale at all. I think it makes sense for them. But for a company of our size, at our moment in time, we believe we're better serving for shareholders remaining focused on gold and silver.
And so what is your production right now and outlook, just generally speaking? I mean, if you have those numbers handy, and what are you trying to do as a company? Because what I see from over here, having paid attention to Fortuna, it seems like it's growing. What is the outlook? Like, where do you want to take this company?
Fortuna today is producing almost 500,000 ounces of gold, and that's a gold equivalent, okay? So if I break, for example, my second quarter production, we produced 116,000 ounces of gold. That's a gold equivalent. If I break the gold equivalent into its components, gold accounts for 92,000 ounces, no? 92,000 ounces produced in the second quarter, and silver almost 1,000,000 ounces, right? We deliver 112 to 120,000 ounces of gold equivalents per quarter. And 80% of revenue comes from gold, 10% from silver. And we have a small byproduct, lead and zinc byproduct coming out of our Caylloma mine in Peru. So that's basically the breakdown of our production. We don't have in sight growing to 1,000,000 ounces today. What we have in sight is consolidating Fortuna as a 500,000 ounce per year producer with competitive cost, with long life of reserve, say 10 years plus. So rather than pushing for growth in the portfolio, what we're pushing for is consolidating the 500,000 ounces, but with industry leading cost and projected life of reserves of 10-year plus. That is our strategic objective. No, we believe that over time that will set Fortuna apart in the peer group.
So, as far as I remember, you've been leading this company since the founding of it. How would you describe your leadership style, how you approach leading a mining company?
Yes, I have been leading the company since day one. I co-founded Fortuna with two associates who joined me on the board, and I have been the chief executive officer putting this company together. And if you ask me to characterize my leadership style, I would say it's affiliative. this is a complex business and you cannot grow and succeed if you're not working with the right teams. So affiliating those teams to the vision, creating a constructive, high performance environment for those teams, empowering people, you're not going to succeed. This business is too complex, too challenging, too demanding to think that an autocratic style or something like that will do the trick. You need to rely on good people and affiliate them. So if I think of my leadership style, affiliative, I try to affiliate my senior team to the vision, to the philosophy, make sure everybody has the values of the company clear, and we pull all in the same direction. We all have the same goals and have a positive environment that fosters, high performance team. No, so people is key. It's also the most difficult part. No, but if I think I do something well over these years, has been attracting and retaining top talent.
In a sense, it highlights the importance of delegating, right, as a leader. And then, as you say, once you find the right people, then empower them. Seems to be what you're saying. Very interesting. Now, you, as a co-founder of the company, you grew this from the beginning, and I assume you grew it from exploration. What advice do you have for explorers out there? There's a lot who are suffering right now. They don't have money, despite the enthusiasm for metals in the last year or so. What is your advice for an explorer or even, say, a company that's been around for a few years in terms of surviving and kind of making it, so to speak, for the long term?
Yes, Fortuna did not evolve from an exploration company to a mining company. In that case, perhaps we are a bit of a different animal. When we came together with the two associates, Simon Ridgway and Mario Schottlander, our original plan was to put together a mining company, right? And I led the search for the assets. If I have a recommendation, someone wants to listen to a recommendation from me, I looked at a lot of things. And in those early days, we were pressured by the fact that time runs against you when you have very little money, right? When you don't have enough resources. Remember that we were putting together Fortuna back in 2004. Silver was trading at $3.80, $3.50. No one cared much about the sector back then, right? Today, developers, explorers are suffering in a tough market. But what's strange is that prices are close to record highs or record highs. In those days, the market was dismal and the underlying commodities, the precious metals, gold, silver, were also dismal, right? So there was very little to look for consolation rather than taking a long-term view. But my recommendation, I looked at a lot and I was tempted to jump at one or the other, but showed restraint, looking for the right one. The teams are important, the jockey is important, but you need a good one. And being patient and calm and stay the course until you find the right asset. And that would be my recommendation. Easier said than done, of course, right? But you need to be able to bring the right assets. If you look at Fortuna's track record, every project that we have brought into the portfolio has been developed into a mine. Everyone, right?
If you have a 100% track record, that is pretty impressive. So as we wrap up here, Jorge, tell us, what are you excited about? What's coming next for Fortuna? Do you have any kind of big things coming up on the roadmap or coming up next? What are you excited about right now with what's happening at Fortuna?
In our portfolio, we have today opportunities and also challenges, right? We have one mine or San Jose mine that is running out of reserves. We're exhausting the reserves at the San Jose mine in Mexico by the end of this year. And at the same time, we have big opportunities in front of us and big levers for continued growth and consolidation, as I explained. For example, our Seguela mine, our newest and flagship asset, continues to deliver on exploration success. Our teams there continue to deliver on exploration success. We just announced this year the new discovery of new ore body, Kingfisher. We're quite excited about Kingfisher. We have had 2 news releases on the exploration work at this new prospect. At Séguéla, we have a commanding land position. 35 kilometers along the belt are completely under our control. The right rocks, the right geology, the right structure. We have aggressive exploration programs there. We acquired this year also, last year, I'm sorry, the Chesser Resources, an Australian listed company that through that we acquired the Diamba Sud project in Senegal, which is, we expect, with some additional luck with the drill bit, for next development project. We currently are exploring, drilling, trying to confirm the existing resource that we inherited from Chesser and expand it. That's something that we'll try to define early next year for next development project in the pipeline, right? So, lots of things happening and lots of opportunities and enough challenges to keep us on our tiptoes as well.
Indeed. I mean, it sounds incredibly complex dealing with all these projects and all these different regions. I guess as one kind of last final question here, like, how do you deal with the complexity, all the different jurisdictions, different mines? How do you deal with that? I guess, do you go to the gym to clear your mind? Like, how do you approach that?
First, I go back to what we discussed when we touched on the leadership subject. People. I couldn't do this without the right people, competent mining professionals that I can, bounce ideas with and make the right decisions with and can execute. Good execution is key in our business. I couldn't do it without the right people and the right structure, of course. The organizational structure of Fortuna is designed to manage this complexity. For example, I work with 2 chief operating officers, one for the West African region, David Whittle, who is based in Abidjan, the economic city capital of Côte d'Ivoire, and then with Cesar Velasco, who is our chief operating officer for LATAM, and he works out of our Lima management hub in Peru. So, I work very closely with them. I have Eric Chapman on technical services, Paul Whedon, vice president of exploration, Linda Desaunier, legal, and of course, Luis Ganoza, our CFO. And also Armando Nakamura on vice president of people. So, just a top tier of mining professionals, executives supporting me, supporting the business, making Fortuna a reality every day. So that's how we manage it. Yes, and I do have to clear my mind and do a lot of exercise.
Good, as do I. I find it very beneficial, as probably many people in the audience do. Jorge Ganoza, President and CEO of Fortuna Mining, thank you for joining us once again and sharing your perspective on this week's Northern Miner podcast.
Great.
Thank you once again to Awale Resources for sponsoring this week's episode of the Northern Miner podcast. You can learn more about Awale at awaleresources.ca. And a big thank you also to Jorge Ganoza for joining us once again and sharing his very interesting insights on how to run a mining company, as well as his views on West Africa, Argentina, engagement, and more. So I hope you enjoyed the program, dear listener. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.